Good afternoon. This is Ken Long from Tortoise Capital with a review of the trade of the day for November 28th, 2012. We're actually going to take a look at three trades in the series here. No runaway huge winners. So this is very much about the craft of trading and hanging in there and taking what the market will give you and not overstaying your welcome. Okay, so the first one we're going to look at is right after lunch. It's an SQC, sideways quiet channel, and the symbol is FB, Facebook. And so what we've got is the river going sideways. The river is the blue Bollinger Band, 30 period, 1 standard deviation plus or minus. Thick black line is the 30 period moving regression. Thick blue is 10 period moving regression. The thick red is the Bollinger Band mean, which is a 30 period simple moving average. The orange looking ribbon is a 2 period Bollinger Band plus or minus 1. Thick blue vertical line is when I'm stalking it. Thick red line is when is my initial stop. Green circle is when I'm going to enter. Green arrow means I think it's going long. And the thick purple is the volume weighted average price. All right. And we use those markings or parameters for all these. So we've got, at the time we're stalking here, we've got a sideways quiet channel in this solid yellow region defined as the Bollinger Band mean is slope is 0, so it's flat, sideways. Narrow range. Both regression lines and price are contained inside the channel, inside the river. And so that's the definition of a sideways quiet channel. And I'm going to buy the breakout of the ribbon out of the river. And so that gets us an entry at 26.31. Now I'm going to use a 20-cent stop, so around 26.11. That's the thick red line. You could make the argument that 26.20 is possible here, 11 cents, but Facebook is a new symbol and it's fairly volatile, and I don't have that much confidence yet in an 11-cent stop on it. But based on just technicals, it could be placed here. But we're going to use a 20-cent initial stop and go right there. So we buy this position, we got our 20-cent stop in, and we're going to let that work. So that's right around 13.51. The next trade, also right around 13.51, a few minutes earlier. What we've got is a regression line crossover, same day, November 28th, and we're looking at symbol UVXY, the double VIX ETF. Now, the VIX, in my view, is looking like it's going to go up here because we've got the regression line crossover outside of the river, found a bottom, and now the price and the ribbon have entered the river and cross the regression line right here. So I'm ready to enter at 2015. And I've got a 30-cent stop in, so at 19.85, a little bit off the chart, but you can see where I'm going to be 30 cents below that. I'm waiting to see what it's going to do at the Bollinger Band mean and then leave the river, and my hope is that it's going to go all the way to 21.30. If it does, that's going to be, a 3 or 4 hour move just to get back to the volume weighted average price for the day. So that looks like a low risk move to me. That's about a 4-to-1 reward to risk. I get paid for taking that early position. And the hypothesis is if this actually does work, then this, in retrospect, will look like a swing low. So we go ahead and make that move. Now I'm a little bit concerned here because I'm long Facebook, but now I'm long volatility, and they usually are inversely correlated. But my thinking is that Facebook is coming off a volatile period and starting to show some strength, and it may be bucking the broader market trend. And so I'm willing to take one position in each one, but I'm going to monitor them carefully, and I'm not going to stick around long in case they start failing. All right, let's see what happens next. We'll take a look here at the UVXY trade. So here was the entry at 13.48, and I'm thinking it's going to potential to get to the VWAP. It gets through the Bollinger Band mean in the river. It starts to leave the river, but then it starts failing. At about this time, the rest of the market starts moving up. So as the market moves up, volatility hedgers get out of there, and so it rolls over. And I'll go ahead and take my little half-an-hour exit at 20:30 before this thing gets bad. When it reaches the top, when it gets through the Bollinger Band mean and then reaches the top of the river, somewhere in here, I'm moving it to no lose at the bottom of the river so that I don't give back the gains through the width of the river there. So this is just blocking and tackling here, basic blocking and tackling at 0.5R. Let's see what happened now over in Facebook. So this was the region that we saw before, the sideways quiet channel and the entry. Here it was, it left the river. We got a nice little spike up, pulled back, never came close to the stop. Mucked around all day. Towards the afternoon, makes a nice run up to 26.40 and some change. And because I don't want to hold this thing overnight, I go ahead and take the exit at 26.40. This is another one of those 0.4R moves. So again, paying for dinner for two and getting partial wins better than losses. And I don't want to hold this thing overnight. So that's one where the expected follow through or the potential follow through didn't happen. And we were hoping that it would get up to the VWAP at 26.90, I think it was, but it never really followed through. So Facebook just kind of peters out, and I'll be looking to continue to trade that as a turbo in intraday. But right now there was no reason to hold that rascal overnight. Now we're going to shift back over to UVXY. I'm sorry, that should read UVXY instead of Facebook. And so this was the trade, the earlier trade, and then the pullback. We ended up taking that cash in this rascal here at 26.40. We get a regression line crossover shortly thereafter, and then it fails through the river, and then it fails out of the river. Now, if you can short UVXY, that's the place that you're looking to short. Is because you have the ribbon and the 10-period regression line leaving the river, did a regression line crossover, everything's rolling over. Shortly thereafter, right in here, when the 30-period leaves the river, that's the beginning of trending behavior that would happen right about in this area, about 1975. But I like to take it, especially on failures, I would take this. Now, if you can't short UVXY because maybe you're trading inside an IRA, then the inverse, which is the trade I took, is this one, and that's SVXY. And so this is the area I'm stalking. So we got the regression line crossover now on the bottom. What I like here is that the 30-period regression line has rolled up. We had some sideways quiet channel in here. The price came back and held support at the Bollinger Band mean, well above the VWAP, and then took off. And the 30 is charging ahead. Shortly thereafter, the Bollinger Band mean starts to roll north, and volatility getting wider, and then some volume comes in to bump up the VWAP. So what I like here is this entry at 75.20. This is showing a 50-cent initial stop. And it makes a nice run into the afternoon up to 76.34, actually 76.44. Excuse me. And then starts pulling back. And again, this is getting towards the afternoon. I don't want to hold this overnight, so I just go ahead and take the exit at 76.30, and there's a couple R. So what we have here was some just trying to make contact with the ball here. Taking a measured reward to risk approach. These are ones that didn't follow through, so I don't stick around. I don't mind taking partial wins. I like to get paid. This last one turned out to be a nice little burst into the afternoon, but because it's so close to the close, I consider that really kind of noise. And so I'm certainly not going to hold any of the volatility ETFs overnight. The overnight gap can be 20%, and it's hard to sleep with that kind of pressure. So that was the trade of the day for November 28th. 3 little trades, actually, and showing how we set them up and manage them when it looks like nothing special. And we still get paid. Net for those 3 trades is 2.9R, and you can make a living on that. So thanks for your attention, and keep your risk measured and your powder dry.